What's up, YouTube? It's your boy Black Market. I wanted to create this video because one of my good friends, he actually used to be my football coach. He hit me up today, and he he asked me about some of his stocks. He was asking me some questions, and he specifically asked me about PayPal, and he was asking, if he should hold on to it or sell it. Um, you know, and obviously with the market kind of taking a dump the last few days, people's looking to probably get out of some positions and just cover some of their gains. So I wanted just to make a quick video to go over, hey, if you've got some stocks, for instance, in his case, he says he likes to buy stocks and hold on to them for about 3 months. Um, but if you've got stocks, if you want to hold on to them for a month, hold on to them for a few months, and then get rid of them, kind of, what would be a play or kind of what would be um, a type of scenario, right? Or your type of strategy to do that. And it's smart what he's doing, right? If he's wanting to buy it and then sell it in 3 months, he's essentially trading quarterly. And a couple of things I would tell him is, one, make sure you're watching out for earnings, right? Because obviously companies have earnings every quarter. So you want to make sure that you're not buying that stock when it's going right into its quarterly earnings, because those prices are going to fluctuate a lot, right? So you want to make sure you know where those earnings dates are. And then two, the biggest thing I would really use for that is the 21-day moving average, or the 21 EMA. And essentially all that 21 EMA is the average price of a stock, right, over a 21-day period. This is what this red line is here. And I mean, you can get on Thinkorswim, you can get on TradingView, you can just go to the TD Ameritrade website and plot just a basic 21-day period moving average. You can just plot that line, right? So it's a very simple chart to make. Um, I've got a volume average on the bottom. Really not that big of a deal to use if you're trading on a monthly or a quarterly basis. And then I've got an ATR line at the bottom. And so what this stands for is the average true range of a stock. I use this a ton, especially when it comes to day trading and just technical trading. Um, so all this means is the average range, right, or the average price movement of a stock based on that period. So, for instance, we're looking at the daily chart. All this is saying is per day. Currently, right now, PayPal moves about $11.76, right, per day. So let's say you're wanting to trade every 3 months on a stock, and all your strategy can be in this case is, hey, I want to buy a stock when it closes above the 21-day moving average, and then I want to sell it when it closes below that. So in this instance, he would buy, or you would buy, for, let's just, $100, right? And then now we're moving up that 21-day. There's no close below it. There's no close below it yet. I wouldn't necessarily call this a close below it because it's pretty much right at that line and it's basing right there, so I'd still hold on to it. There's no close below. Now you've got a few red candles, and now you've got a strong red candle right here that closes below it. So you'd sell it right here at 192. So you almost doubled your money just on a simple play like that. So let's go to the next one. So now PayPal opens at 190 and some change right here. No close below, no close below. Boom, it closes below it right here. So you're about $8. Not a huge return, but you're still making money on your shares. So then you sell it there. It's still below it. I wouldn't necessarily count that as a buy. So we're looking at buying it right here, because you can see there's really no trend here. So you won't be buying it on the trend. So you buy it here since it's closed below it and it's got some strength. Buy it for 194. No close below. No close below. Here's your first close below, right? You're selling that at 235. So you've made some good money there as well. So I mean, just a simple way to long-term trade that's not very stressful, but a simple strategy. Or you can go. Let's go to a monthly chart. You can do the same thing on a monthly. Now, obviously, this is constricted down a bit because now each candle is going to represent a month, right? But the same thing here. You can buy it for $41 here, and then you're going to sell it once it closes below. So now you're selling it at 97, right? So you more than doubled your money. Then you get back in the next candle, the next month, I guess, right? Because it opened above. So you're buying it. Let's just say you buy it at the top at 122. You could have sold it at the highs, but I mean, obviously, would have been perfect timing. But let's just say you sell it here. So you're selling it for 238, right? At the low of that green candle. And that would be, we're just saying today. Let's just say you sold it today, for instance. So I mean, that's kind of a quick and easy way to do it. Another thing you can do if you want to be a little bit more active and dive in a little bit more is you can pull up these what's called Keltner channels. And what Keltner channels are is it breaks up the average true range of that stock, or right, the average price movement of that stock into the ATRs, right? So this means this midline is at 263, and like I said, the average true range is $11. So this should be around 275 or so. Then you're gonna move up $11 from there. So you're looking at 286, right? Move up another $11. You're around 298, right? 297. So this basically just splits up your ATR into 3 different segments. And what's key about that is you can look back on the chart and see, okay, looks like PayPal goes up to 3 ATRs and then it starts migrating back to the mean, right? Because you always got to remember the stock is doing one of 3 things. It's either moving away from the mean, it's either moving towards the mean, right? Or it's either right next to the mean, right? So you can see at about 3 ATRs, it starts coming back home each time. So you easily can just say, I'm going to buy it when it's close to the 21, and I'm going to sell it when it gets 3 ATRs away. So you could have bought it here for 193, sold it for 219. Bought it here for 207, sold it here for 238-ish, right? Bought it here for 231, and you could have sold it either here if you were selling it at 2, or sold it up here if you want to hold on to it for 254. Right now, you can see here if you would have bought it at 239. Now, what I like to call it is very extended because it's above that 3 ATR. That's why you had such a drastic drop back down. But you still could have bought it at 239 and then sold it anywhere up here, right, at 284, 288, anywhere up here. Once it got near that 3 ATR, you could even have sold it here at 270, still made $40 a share. So that's just a quick way, you could long-term trade and use some entry and exit points for your trade, so you're not kind of trading in the dark or trading blind. So if you got any questions, you know what to do. Hit your boy up, like, comment, subscribe on the channel. Talk with you guys later.